So with that, the red light's on, and I want to hi everybody. This is Dennis Wilborn, and today we've got Harlan with us from All About Trends. David is on somewhere at a wedding or something. Do you know where David is, Harlan?
Yeah, apparently he had a wedding this afternoon.
Okay.
Really good friends.
And so Harlan's with us today. Harlan was with us a few weeks ago, and I'm really glad he's here. And I'm Dennis Wilborn from Active Trend Traders, and we're going to talk about the market and talk about what's going on, and hopefully provide some at least some clarification or at least preparation for everybody to go into next week. And again, I want to welcome everybody. So let's get going. I want to remind everybody that any materials that we do present here are for training purposes only, and that we always recommend paper trade any new system or whenever you're checking anything out prior to investing your own, risking your own personal capital. So this is kind of telling. This is my market update for 7-Eleven, the Spiders, the NASDAQ, and the Russell. Basically, the story this week is all three of them did what we were expecting it to do from the aspect last week, and that it didn't take much of a catalyst. It took kind of like Germany with a couple of bad industrial reports, and then Portugal, and it seemed like every one of the market was had a hair trigger to the downside, and so the resistance there was very, so it seemed like the path of least resistance, at least at the beginning of the week, was to the downside. Outside influences that we had, of course, were Germany, UK. Typically, it was, seemed to be Europe. There was no, there was not the conflict over in Iraq or anything like that. And so we had said last week we are very, very extended. And so we worked off some of that excess this week. But what happens next, that is a big question I think all of us are trying to answer. And part of it we won't know until the price action works itself out on the ground. Let's take a couple of peeks here. One of the, let's get in and take a look at the market itself. One of the charts that I like to take a look at is this one. It's the percentage of stocks above the 20-day moving average on the NYSE, and it tends to work very well, especially when it gets into this oversold zone down here below 30, between 30 and 20, and you can find this on barchart.com. It's free under the momentum, and I'm looking for market momentum. And it turns out that every one of these low spots turned out to be a point where the market, it was an inflection point where the market turned back around. And as you can see, we had negative divergence in this indicator, and this was last week. And we know that the S&P was making new highs. The NASDAQ was pushing on to highs it hadn't seen since 2014 years ago. And so we had some negative divergence, and then this last week we start getting this plunge. And this was a pretty healthy plunge where we went from almost a little bit over 75% of the stocks on the NYSE being over their 20-day average. Now we finish off the day with about just about 37% of the stocks on the NYSE being above their 20-day moving average. And it's not so much that it's a, I don't utilize these high points necessarily as to get short, but what I do is utilize them when it's time to start looking to kind of pull back in from some of my long positions, and it's tended to work very well over time. And then another thing we'll take a really good look at, which I thought was kind of interesting today, Harlan, is while we had a little bit of a mixed market with the Russell being down, the S&P and the NASDAQ being up, is look at the breadth on the market. In actuality, the breadth on the Nasdaq, while it was up about 28 points, maybe a little bit more. We'll take a look at the chart. The breadth was actually just kind of mediocre, slightly more advancers than decliners. But look on the NYSE, more decliners than advancers, and the over-the-counter, same thing. But the breadth was, clearly the buyers, they were there, but they weren't really, there may be an, okay, sorry, Michael, yeah, you can just find these charts I'm looking at right now on barchart.com. And you'll see this on the recording when it pops up on YouTube at Market Tech Talk a little bit later today. So I don't know if you go with this indicator or not, Harlan, but I know I don't pay a lot of attention to it. But when I know the market's looking for a potential bottom to maybe bounce a little bit, I do go, well, how healthy is this bounce? And right now, it's looking mediocre at best.
I don't really use it too much because I can kind of tell under the surface. It's to me, it's a nice bullet point that helps confirm what I'm seeing under the surface. I mean, if you're one that just watches the headline number, you're not going to see what's going on underneath the surface. You go, oh, the NASDAQ is up 18 points, so it's a decent day. But that chart that you had there shows you exactly that, you know what, it's pretty mediocre. Buyers and sellers are evenly pitted. So, but if the market's up, if the NASDAQ's up 18 points, well, where is it?
Yeah.
And usually where it is, it's the names that make up the biggest percentage of the index.
Yeah, right on.
Apple is 8%. I think Google is 8%. I think Amazon is 6% or something like that.
Yeah.
Amazon was up huge today. Facebook makes up 3%, and that was up nice. So you see, you can just, on days like today, it's almost as if they trick you to giving you the impression that everything is fine when you just look at the headline, but it's only a few stocks that make up the bigger percentage of the index, which really masks what's going on underneath the surface.
That's right. It gets back to the understanding what the internals are doing. It's kind of like being plugged into the EKG machine or taking the X-ray. But here we go. Let's get on to the indices themselves. On the right-hand side is a weekly chart. On the left-hand side is a daily chart. The couple weeks about at the beginning of the week, the S&P started off with a bearish Arami, right up against its high from last week, and then proceeded the rest of the day to push its way down, but it did find itself, it found support at approximately the 20-day moving average. And now it's because there was an extension between the 8 and the 20, and we were still extended from the 50, prices over the last couple of days have kind of been stuck right here in what I call no man's land in between. It's finding resistance at the 8 and support at the 20. However, one of the things I was noticing today, Harlan, is that isn't it kind of interesting how it seems like we're kind of flattening out, and so we may be seeing, topping just like bottoming is a process, and I know I'm anticipating, but I'll wait until it actually happens, for this summer's action to be similar to last summer's action. So I would think we would probably get some kind of summer doldrum or even a sell-off into the summertime. And last year it started towards the end of July, and I'll just flip over real quick. Well, not flip over. I'll go back a ways. And here we are in just at the end of July last year. Matter of fact, this was at the actual beginning of August. And somewhere between the middle of July and August, we turned over in the market and fell back down. Excuse the train going by, guys. That's what happens when you live in a quaint little town in rustic California. And so, is it going to be the same kind of pattern this year? We don't know, but those summer doldrums do tend to repeat a little bit and then build up to a potential buy point later in the year. But again, we have to wait for the charts to tell us what it's going to do. And right now, it's just showing a few minor clues. On the weekly chart, I think it seems a little bit more. Again, coming up to the high, we have some of the momentum indicators, stochastics, and the momentum indicator actually coming off of where they were last week. And one of the things that's quite interesting this week, last week was a 4-day week, this is a 5-day week, and look at the momentum has dropped off significantly in the S&P. So we can take a look at the composite. It sold off much greater, with greater exuberance than the S&P. Actually busted below the 20 before rebounding, and look where it stops, right at the 8-day moving average. It looks like it is kind of trying to bottom down here on some of the indicators. So I'm wondering if we're going to get one of those where it just stays where it's at, or we may get a little bit of and all of these were kind of low volume rebounds. Are we going to pop a little bit above it and then pull down, or pop back up, retest the high, and then roll over for the August into September time frame? Again, I don't know, but it's something that I'll keep my eye out for. Look at the, and here may be the real one index that's maybe the drag on the market that may pull down the rest of the market. We'll see. And again, right now, those are all speculative type of approaches, but the Russell, which houses a lot of the growth stocks that we trade, the Russell clearly hit this old resistance from its uptrending channel line, popped above it briefly a couple of days, and then started selling off. And as you can see, it sold off much harder than the rest of the indices, and actually gapping down yesterday. Well, look where it comes to rest at, right at the 100, approximately the 50, and but the clues on this chart that are telling me that we may be in for, at least on the Russell, some more downside is one. We get a cross of the 8 and the 20. These are short term, and so in the past, what's happened when we've got this 8 and 20 crossover, we've rebounded and then fell again. So are we going to bounce off the 100 and the 50 back up into the 8 and 20-day moving average and then roll over? Since it again, majority of these are the Russell has a majority of growth stocks in it. It's going to tell me that for at least the interim, the ride with the growth stocks is going to be a little bit volatile. And so that's what I'm seeing in the market right now, Harlan. And the last thing is, if we in fact bust through this 14 or 1149, 1150 range, we've got a couple of really good support levels there: 1140, 1120, and ultimately back down here at 1090. We could potentially see a retrace from this double top type pattern all the way back down to the bottom of that little cup. We could.
Right.
So
the interesting thing is that 1149 level is, by the way, it's also a 50% Fibonacci retracement off of the May lows, if I'm not mistaken.
You're absolutely right.
So you've got a major inflection point here. You've got that. You've got the 50-day moving average. You've got a prior support zone that goes back to, I don't know, mid-April. So
Yep.
There's a lot of inflection here. So for now, it's support.
Yep, I agree.
But, but like what Dennis had laid out earlier, we could bounce and it could roll back over.
Yeah.
Which isn't going to be a problem, more so. But I would, if we do bounce off these levels on the Russell, expect a retest just to be on the safe side.
Yep.
You know, that way you're not a deer in the headlights in the event it were to occur. I'm not saying it's going to, but, you know, you always want to be aware of what can happen.
Yeah.
What's the phrase? Prepare for the worst, but expect the best.
Yes.
So
Yeah, and that's one of the things, Harlan, I want to make clear for everybody, is that basically I tend not to want to trade this first bounce down. That's just because, and at this point in particular on the Russell, would be looking to, for various stocks showing a similar type pattern, looking for it to come back up here, see how well it retests when it gets back up to the moving average or back up into these resistance zones now, for a potential trade to the downside, or we get a test back up, then a pull back down, and if it stalls out here, then I would expect the uptrend to continue, and that's what I like the second test. And that's why I have been that's why I keep saying I'm waiting for the subscribers to the active trend trading system.
well, that second test is based on where you had it laid out. That would be a first high or low.
Yeah, exactly.
And that's a change.
So
Okay.
okay,
But you're right.
folks, any questions on the market today? If not, I am going to. Let me get back over here. This is a good time, if you do have questions, to go ahead and be typing them in, because I'm going to switch over to Harlan and let him talk about some of the stocks and some of the things that they're seeing, and then we'll bounce back to answer any additional questions. So let's see. Harlan, I am switching control to you.
All right, let's see if I get this right.
You got it.
Hang on. How's that?
Yeah, it looks good.
Alrighty. Much like Dennis saying, we've been pulling back, and last week David had talked about after you bowl for strikes, which is what we saw, a lot of strikes, which in bowling is a good thing. Now it's time to set up the pins again. We've seen indexes starting to pull back. They look pretty orderly. Aside from the Portugal issue, which is a big issue deep down going forward. But we've seen that kind of stuff before. So in doing so, it's allowed leading stocks to pull back to support levels or are in the process of pulling back to support levels. So what does that do? It sets up a lot of alternative entry buy points for us. Issues that you don't have to chase out of fear of missing it after you've already missed it, which is good. So that's pretty much where we start going into next week. It's time to set up the pins, and slowly but surely they're being set up. It is a market of stocks. Some names are already set up, and they could go at any time. But generally speaking, much like Dennis had mentioned earlier, I just didn't see anything that jumped out at me and said, I need to do this right here, right now. There's just no sense of urgency. So that's where we fall, and there it is. Let's let them set up the pins so we can do what we did in May and June and bowl for strikes and have a really great month. Take a look at the NASDAQ composite. I have a little bit different than what Dennis does. And you can see that this index off of the April lows, May lows, it's in a clear uptrend channel, those two green lines. And of course, you pretty much came up to trend channel resistance, if you will. And so, when you get to resistance, we don't buy resistance. In fact, we're more apt to sell our peanuts when the circus is in town. Because once the circus leaves town like it did here, who are you going to sell your peanuts to? You have to put them on sale. So, we did a lot of piecing out of names up in here. So now here we are pulling back. How far are we going to pull back? I don't exactly know, but I don't need to know. All I need to know is where is support, and we have multiple levels of support right down here. We've got a trend line here. And we've got another support line here. And then right below that, we've got the 50-day, and right below that, we've got the green uptrend channel. So there's multiple levels down here. And if we were to see some weakness, much like we saw yesterday and a couple of days back, I really wouldn't fret it. If anything, you should look at it more as an opportunity to say, yeah, I get to buy things on sale, versus, uh-oh, Chicken Little, the sky is falling. And we say that because that trend channel. You're going to see that as we move on to these slides. These trend channels are excellent because they keep you centered emotionally as a guide, and they help keep your emotions in check. So you're going to see that as we move on here. Here's another one. Excellent. Just look at the green trend channels. All this issue did is stair-step its way up, 2 steps forward, 1 step back, 2 forward, 1 back, 2 forward, 1 back. And you can see, obviously, chasing strength, don't worry about it, because they always pull right back. Chase strength, you would have been better off just waiting. Chase strength, you've been better off just waiting. And sure enough, this name makes up 3% of the NASDAQ. This one came right down, hit trend channel support, hit the 50-day moving average, and there it is. It's kind of off to the races. How far it goes is beyond me. If we were, as Dennis had mentioned with the Russell chart, if we were to come down, bounce, and come right back down, you know what? There's support right here. So, it's one of those issues that we own a little bit of. And, maybe if it continues and it spikes through and heads up to 68, you know what? In the short term, I might just take some of those gains and peel them off the table. So that's one of them. Here's another name. Same situation. In a clearly defined uptrend channel off of the May lows. And the same thing. If you chase strength, typically just relax, let them come to you, and you'll notice that pullback took it back to near the 50-day. Then you got another bout of strength. This is the hard thing, to not buy the stock. No, I don't. And then the same thing here, and it kind of came up to, one could say a trend channel resistance zone, and here we are pulling back off its highs. So again, the trend channel keeps you centered as to what the overall trend is in this particular issue and many other issues that you've already seen. Moving on, right back to our cornerstone that keeps you centered, and that is there's only 3 things you need to know in the stock market: uptrends and how to trade them, downtrends, how to trade them, and changes in trends, and not only how to trade them, but how to identify them, because if you are long at a market peak, you need to know when to get out. If you are short at a market low, you need to know and what to see to walk away and cover your short sells. So that's the backdrop and the cornerstone upon which All About Trends is currently built. So we don't need to make it any more difficult than that. So moving on, our favorite pattern, our strongest pattern, are pullback off highs. And typically it's in stocks that are in confirmed uptrends. They're above the 50-day moving average, and they're showing an orderly pullback to support either a prior support level, the 50-day moving average, or in issues that are emerging out of a correction, the trend channels that we've shown just earlier in some of these names. So it's all about trends. Let's take a look at a name right here. Cavium, same thing. You can see this one did break out of a base, and if you chased it, you know what? All you had to do is wait 3, 4, 5 days and let it pull back, and then pick it off. Buy it off on weakness. You don't have to chase it on strength. Of course, this one kind of followed through, but remember, where were we in the overall market climate at this point in time? We were pretty extended, and sure enough, typically stocks do come back down and test that initial breakout level. So right now, A, B, C, pulling back off highs. So for right now, as long as it can sit down here and stabilize, then that would be a good thing, because we want to see stabilization, meaning the stock is not going down anymore and buyers and sellers are evenly matched. And then you're looking for a breakout above the pink line at that time. So, or you just buy support and be willing to take the risk in the event it were to drop and break below the 46 support level, which one could say is a right side of cup crossover, which we'll get into those too. Here's another name. What's the problem? You know, I mean, the market's been pulling back. Here's a nice looking name. Look at it's in a clearly defined uptrend channel. Sorry. And all it's doing is pulling back its excess. When you start getting these volatile gap up, I don't like to trade those because more often than not, if you just maintain a little bit of patience, you know what, they're going to come back down to you. And sure enough, you can clearly see it. So, and we talked about speed at the beginning of this before we started recording. Those gaps, that big gap up into a breakout, into a new high, you literally have a minute or two to jump on that trade. And what did it do for you? Actually, nothing. So, you know, assuming you weren't a swing trader and just, you know, get a quick scalp and say, that's it, I'm out of here. But for anybody that held it, thinking it's going to keep going, you know, these gaps, they do retrace. And we kind of call them air pockets. But now, guess what? If you were just patient, you're allowing stocks to come back to you. Here we are. We've got a name that's pulling back off highs. How far is it going to go? I don't know why that keeps popping up. My apologies. So, you know, we've got some support at 152. We've got the 50-day moving average at 150. So it sure as heck beats chasing it as it broke out into a new high at 160 plus. So buying right, as they say, or as Bill says, solves half your selling price.
Right on.
So for us, we look at it a little bit differently. And that's where the trend channel is. That's where the trend channel. See, we're looking at names based on what is actually happening from this perspective, because this whole thing defines the whole uptrend. 2 forward, 1 back, 2 forward, 1 back. You know, versus looking at charts from side to side. So after they've already made nice runs. It's just a little different way. It's what works for us. If it works for you, then that's great. If it doesn't, that's fine too. It's, you know, it's your choices. Now this is where we get into right side of the cup crossovers. It's great. You're looking at leading stocks that are emerging out of a correction versus issues that have already completed a whole correction. So it also allows us to buy issues at lower entry buy points. So because if you know the definition of a cup, you cannot have a cup without first having the left side of the cup, the bottom of the cup, and then obviously the right side of the cup. You need to know the components of that particular pattern. So it stands to reason, if you know what the components are, well, where's your entry? Let it start to come up the right side of the cup. It's a lot easier entry point. It keeps you from chasing things. And, you know, if those market leaders reassert themselves, you know, they can go on and keep you in big trades. So there you have it. Let's see what else we've got. Gas log was an excellent example. All you had to do is, you know, you could see the change in trend pattern from down to sideways. There's your left side of the cup. Here's your bottom of the cup. And all you had to do is wait for it to start coming up the right side of the cup. So that's what we did, and that was our entry point. We did sell some as it broke into a new high up here, and we still have a little bit from down in here in the 24.5 range, 24.60 I think it is. So we've got a little bit, but what's interesting is, where did my mouse go? There it is, cursor. See this low, line them up. You have an issue that is now trying to start to come into a uptrend. If I were to draw channels here, you know, the trend channel support would work, but trend channel resistance would not, only because it just went vertical. So there you have it. So that's it. Also, buying right here, again, solves half your selling problems versus having to chase it after it's already ran. So that's just us. That's the way we like to do it. So what are we going to do? We're looking for stocks that we can buy that are market leaders, liquid names. Growth is obviously where we want to be. And then it's just a matter of managing the overall trend of those stocks. And the way we manage the overall trend, quite simply, is the use of trend channels, support, resistance, moving averages, and things of that caliber. Those are all tools that you can use to guide you. You know, you don't have to make this any harder than it is. So pretty much that's about it for the most part. Later in July, David and I are going to be doing a 1-hour presentation webinar on a money show on themoneyshow.com. You might want to take a look at that URL. Again, I am sorry.
Hey, Harlan?
Yeah.
If that pops up again, choose number 3 and it'll stop popping up.
Okay. All right. We got it. All right. Computer illiterate, right? So, you know, you might want to take note of that. When this is, you know, obviously it's going to be recorded. You can always watch the video after it's been recorded and uploaded to YouTube to get a better URL that you can go to and watch our presentation there on the Money Show. So there you have it. I think it's either the 15th or the 17th. My apology. I think David shot me a quick note saying, "Oops, I got the date wrong." But it's a week or so away, and if you're looking around, just go to themoneyshow.com, and I'm sure you'll find the link there too. So, any questions? Feel free to contact us. We can be reached either David's phone number on there or customer service at allabouttrends.net. Currently, we've got a 15-day trial to come into the inner sanctum, if you will, and take a trial run, a test drive of our newsletter. We have a midday update that comes out every day, and then we have a weekend newsletter that we also put out. So, and then you do trade trigger alerts, and embedded within a lot of our newsletters, we have little educational things that we're always talking about. So, feel free. Dennis, if you want to take that part over, feel free. We do have a combo subscription here, and a way that a person can, take advantage of both services for half. Half of what you normally would do should you just take each service on its own.
Okay. Yeah, Harlan, I'll be glad to chat about that. Got a lot of good comments. I know I like your midday midday updates, and we both send them out, and then we'll shoot each other emails after it. And I really enjoy some of the back and forth email wise, and some of the folks are commenting that they like the midday updates. And I think one of the things the midday updates do, especially when the market's kind of like it is right now, is hopefully keep anybody from getting impulsive and jumping in, before the ice is off the pond, if you will. And so, which is a good thing. So I'm going to switch back.
Right, and that's the beauty. That's the beauty of those trend channels too.
Yeah. And
the trend channels definitely keep you centered.
Yeah, we had a presentation a couple of weeks ago on the aspect of drawing trend lines, and we talked a little bit about trend channels, and yeah, without a doubt, trend channels and trend lines, knowing where that. If you don't know how to draw a trend line, you're missing levels of support and resistance that is hidden in clear sight. So real quick on the active trend trading system, guys, is basically we do we're developed around a 5-pillar system that tells you what to trade, when to exit, when to enter, when to exit, what strategy to use to minimize risk and maximize profit. And we've also done the testing in our live trades. You'll know what to expect. Here's a little bit of where we had a really great, as Harlan was alluding to, a really great June. I think between your service and our service, Harlan, we had profits taken off the table in excess of $10,000 for the month.
Yep, that's about right.
And right now, I am flat the market, guys. I have no open positions, but right now we've taken everything off the table, and here's our profits so far, both income generating trades and capital growth trades, for the month. So we're up about $1,500 for the month. Here's a little bit, you can review this on the recording, just a little bit about why I work to develop. I with a guy back in Texas, Mike Traeger, developing the active trend trading system is basically because back when I was working, there wasn't a lot of things out there to help educate folks on how to trade. And so I try to scope what we do in active trend trading with regard to how many entities we hold, how many we focus on. I try to shape it for the people who are still working so that they can have a very focused approach and not be just overwhelmed by the amount of review, trading, and all that kind of stuff. David and I will be at the TOPS meeting tomorrow. I want to introduce TOPS stands for Trading Options for Profit. It's a trading group here in the Bay Area, but I think they have groups all over the United States. I know they have several of them here in the Bay Area. But we'll kick off at about 1 o'clock tomorrow afternoon and run till 4 o'clock. I'm doing a presentation on connecting the dots, candlesticks, and convergence of clues. And so if you get a chance to stop by there, you can pull off the just RSVP with PJ at tops@help1.com. And this is a presentation I've done a couple of times in the past, and folks, it really helps make the connection between how to use candlesticks properly, and then secondly, the converging technical clues that actually improve your results with the candlesticks. And as Harlan mentioned, we do continue with, and we don't know when this combo special is going to go off, but it's a limited time special. Because you guys tuned in to this webinar, we wanted to offer, you get both of our services for half what they would normally be. And so when this is posted a little bit later on Market Tech Talk, you can hit and subscribe here at Combo Subscription. It takes you directly to that combo service. So let's see what else we got here. So have a great weekend. And do we have